All right, so for those who just logged on, again, my name is Dominique and I am the Investor Relations Manager here at Greenleaf. I have the investment team here with us today. Greenleaf hosts weekly live streams and private connect events every Thursday at 1 p.m. with a new topic every week, highlighting a portion of our business. Today, we'll be discussing the Crossing Center opportunity purchased by the 1031 exchange from Ridgewood Apartments. Before we dive in here to the details of the Crossing Center, I'm going to go ahead and share my screen here. Before we dive in, we want to provide a quick overview of what to expect this evening. We're going to start with some rules of engagement, and we'll provide a brief overview of Greenleaf. We'll dive into the details of the Crossing Center, and then we'll break out into a question and answer portion at the end of this live stream. So to begin, a couple of things to note. You can switch your presentation view to spotlight view, or you can click and drag your screen to change the size of the presentation or of our panelists today. Like I mentioned, there is a Q&A session at the end of this broadcast. Feel free to use the Q&A chat feature at the bottom of your screen to submit any of your questions. You can do so at any time during the presentation. You do not need to wait at the end. This is a reminder that this live stream is recorded, and we will be sharing this recording at the end of the week with all who have attended, along with the remaining of investors who could not attend today. All right, so I'm going to pass it over to our panelists and give us a brief overview of Greenleaf before we get started on the Crossing Center. Thanks, everybody.
Great, thanks, Dominique. I'm Dave Codre with Greenleaf and Nathan here. We also have Natalie, who's going to be going through our Q&A session with us. So at any point during the presentation here, if you've got a question, if you type it in on the Q&A part of the webinar feature here, we're going to take all those and then we'll address everything at the end of the presentation here. So many of you have been with Greenleaf for a long time. As Dominique mentioned, this is from a 1031 with Ridgewood. We bought that in 2016. So if you're with that segment, you've been with us for quite a while now. Over the years, Greenleaf, we've grown quite a bit. At this point, we still do all of our own investment management. We do all of our own operations. We have our own construction team. So when we were doing Ridgewood, this is our 28th deal that we did. We're now over 100 different deals that we've acquired, and we've branched out beyond apartments to deals like this, which is kind of a mix of medical and office, and then other medical complexes, office, retail, etc. So now we're going to dive into kind of how we got to where we're at today. So Ridgewood Apartments, we bought this 2016 for $2.3 million, roughly $44,000 a door. And we invested $765,000 combined into the deal. When the opportunity came to sell this earlier this year, we were originally like, it's working. We know we haven't distributed a whole ton from it on an annual basis, and we got the offer around $115,000 a door, and we quickly tried to find all the keys so we could give it to them. They bought it for just over $6 million. And that means basically for every 50 grand invested, we're about $210,000 on that money. So our total profit was just over $4 million, of which we pushed a good chunk of that into the 1031. And then we had some money, because we're kind of doing these drop-in swaps pretty regularly where some chunk goes to fresh equity. And Lee's sometimes comes back. They handle that with their own tax side. And the 1031 is rolled tax-free into the next opportunity that we have. And that brings us to the Crossing Center that we're going to discuss today. So you can see here, $2.15 million from the 1031, and we're going to use that to buy the Crossing Center with some fresh equity also coming into that equity stack. And Nathan's here. He found the Crossing Center deal, so he's been leading up our efforts to, we found it off market. Right, so they weren't even looking to sell it. So Nathan out there convincing them that, hey, we're a good buyer, sell it to us, and took it from an off-market opportunity to under contract right now. So you want to walk us through kind of like the overall property details here on the Crossing Center we're getting?
Sure, absolutely. This 1031, with the amount of profit we generated, lines up pretty well with the equity we need to buy this deal, and that's kind of attributed to this strong deal flow that we have going on right now. And this deal specifically, like Dave mentioned, came off market, came from knocking on a lot of doors, was brought to us by a broker relationship that we've done almost half a dozen deals with now. And he really did a great job convincing the seller to not hold the deal and refinance it like was their plan, but to, in fact, turn around and sell it to us. And the deal, it is a office deal in the Cobb County area of Atlanta, just north, in a high populated, very affluent area. We're buying it for just over $6 million, which is an in-place 8.3% cap rate, which is a great basis at $100, around $100 a square foot, and it's all in 60,000 square feet. And it's currently about 84% occupied in a market that's more like 95% occupied. So our whole strategy, our whole plan is to buy it and invest the capital it needs in leasing costs and kind of modernization to get it to where the market's occupied, to increase the cap rate to 10% by the time we're done holding it after around 5 years.
Yeah, so we mentioned that it's in a good area. If you've been on some of our previous live streams, we've talked about Johnson Square, which we acquired in February of 2020. And this deal is about 1.5 miles south of Johnson Square. So it's in Cobb County. If you're familiar with Atlanta, I know a lot of our investors in Ridgewood were Dallas and other out-of-state guys, but north of Atlanta, Cobb County is one of the fastest growing counties in Georgia, and it's just a highly affluent area of Atlanta. So this deal is super close to one we just closed.
Right down the road, heavily built out area, very affluent. It's, where I think everyone used to live, and they would drive into the city to work. And then these days, no one wants to sit in traffic for an hour. So people are starting to work and open businesses closer to where they live, which has really benefited office deals like the Crossings, like Johnson. And like Dave mentioned, they're on the same road. They're about 1.5 miles apart from each other. And this area could not be more built out for retail. We've highlighted 4 major retail tenants there. There's a Publix, there's a Whole Foods, Target, Trader Joe's. So any kind of grocery option, you could ask for is in between these 2 properties. And there's even 2 Chick-fil-A's driving south from Johnson heading to Crossings.
That part's critical.
Right. So you got all the lunch options you can think of.
You can ever want
over this property.
So a lot of the times you see all our green dots that are on the screen here too. We normally our best comps are when we compare it to our own deals, because we know how we operate. We don't kind of we get the real story, right? If we compare it to our own numbers. So if we look at this Crossings deal compared to Johnson Square, which we just closed in February, we took that deal from 68% occupancy to 84% occupancy now. At the Crossings, we're starting at 84% occupancy, so we're off to a little bit of a better start there. But you can see the size of the comps.
Yes, a lot of similarities here. Looking at the pictures, they're both 2-story. They're both 80s built office products. By the numbers, Johnson Square is about twice as big, has about twice as many tenants. So the Crossings is just a similar deal, a little bit smaller, and has a little bit higher occupancy going into it. And of that occupancy, about a third of it, same as Johnson, is medical tenants. And it's not these heavy surgery centers. It's local dentists, it's chiropractors, it's people who live in the area who need some office space to see tenants who live in the area.
Yeah, so almost all private medical groups. Sure. So on the sales side, when we look at going into a deal like the Crossings, one, we're going to compare it to what are we doing on the leasing side, which we just looked at. It's like, well, okay, what are other deals in the submarket selling for? And obviously, what have we paid in the past? So sale comp wise, we have our Johnson Square that we obviously know exactly what we paid. We paid $109 a square foot for Johnson Square right up the street. This one we're paying $106. So we're comfortable in that basis range, but there's a couple other deals here that have been traded all north of what we paid.
Sure. Yeah. Looking at this map, this is a pretty tight range. All of these transactions are within a few miles. They're all within a few years. And, it gives you a lot of comfort in these deals that you're buying it at a good basis. Looking at the top, Crossing Centers at $106 a square foot, the price for this kind of product, just general office, built in the 80s, 2-story brick, is around $120 a square foot. And as you slide down the table, as you increase the amount of medical tenants that are there, then you're pushing $200 a square foot. like that comp number 6.
Yeah, our whole leasing strategy, not only here, but also from at Johnson Square, what we kind of built some confidence around was signing all this private medical groups into the space. And that's the bulk of our leasing that we've done. Really, Greenleaf wide, the bulk of our leasing has been medical tenant based. So I think other lease comps that match up to this area and things that we're seeing. Right now, Johnson Square, the place we have was about $18 square foot we're getting stuff for. And like the Crossing Center as it is only in the 13s. Right, so we're getting it, basically leases there are already below market.
Right, yeah, so Johnson Square, had a tremendous amount of leasing transactions in the last year or so. In the last dozen leases they've signed, they've had nothing below $17.50 a square foot. And so, the Crossing Center, which is a little bit lower, they've got some sweetheart deals of tenants that have been there a long time. They're only paying $10 a square foot or $12 a square foot. So, there's a real opportunity there to just match the market, match what we're doing right up the street with crossings, and increase that gap from, where current rents are at the crossings to where we're seeing them at Johnson, over $17 a square foot. So in our modeling, we're even going below that $17.50 and just modeling that we can hit $17 a square foot.
Yeah, and office for a lot of people, it's a different product, or a lot of the stuff that we're doing right now is different. But if we even go back to 2015, 2013, 12 earlier, our whole plan all along the way was to just take an asset, stabilize it, and achieve average rents. We've never been one to kind of push the envelope and go as high as we can and push a lot of turnover. So we're just trying to get into market. And this is what we really like about this Crossings deal, is it follows our business plan over the previous years, exactly what we've done.
Yeah, it just really needs somebody to come in and fund those costs that the seller isn't willing to pay for now.
So let's jump into the investment overview as a whole. I know there's a lot of numbers on this sheet, but in general, this is covering what we're buying the deal for, what we're putting into it, and the returns that we're expecting to get out of it. So 6.25 is the contract price.
A lot of numbers here. We got the capital stack broken out. We've got where the returns, where the fees are. But one thing I'd point out is top left of the screen, you got capital improvements. We plan on putting, about $1 million into this property, and a majority of that is just going to these transactional costs. It's funding TI for new tenants. We just had a medical tenant come in while we're under contract, and great rate, great tenant, good size space. But we need to contribute $20 to $25 a square foot to help them build out their space. So we've got a good chunk of money we're raising on the front end to just be able to keep doing that as tenants come to us.
And fill out that space. When we're exiting Ridgewood was a deal that it maybe wasn't the sexiest, right? It was a pretty standard apartment deal, but we weren't able to consistently hit our preferred return payments there. So we're typically making 1 or 2 quarters of distributions per year. In this deal, right out of the gates, our cash on cash is 10% right away. So not only are we rolling money and having a larger equity chunk, we're also getting paid on that equity chunk faster and more consistently than we were with Ridgewood. So on that standpoint, it's a win-win. When you look at our total returns here on the bottom right-hand side, we're pegging things to a 5-year hold. So our goal plan of 84% occupancy, lease this thing up, spend our TI dollars, and at the end of it, if we exit at 5 years, we're projecting around a 17% annual rate of return over that period. So we think about key tenants that are here, like who's a tenant that's normally occupying this space. As I was mentioning, they're mostly private groups. So these are, that 2 to 5, 6,000 square foot tenant. You can see kind of what we have here, from advanced rehab centers to consulting groups.
Yeah. When I was putting together the slide, unintentionally, one thing that jumped out to me is we use the word family a few times, and it really, pegs the type of tenant that's at the crossings. It's local, it's neighborhood, it's mom and pop businesses that have been in Atlanta a long time. You'll notice 3 of the 6 we highlight up here are medical. There's a dentist, there's a chiropractor. And then there's a Taste of Atlanta, an event service that goes on in Atlanta. It's been going on for 20, 25 years. And then you've got, the church taking up a big chunk of square footage that's, they've been there 50 years. They're right across the street is where their actual temple and Chapel and everything is. So
Yeah.
a very localized, non-corporate, smaller type tenant that there are just way more of out there and easier to lease and fill the space than kind of the name brand corporate,
Yeah, and this is Crossings 2 is the name of the deal, but what's the other one? We bought another actual Crossings Center, same type of product. We bought it in our Opportunity Zone Fund. I think it was like Crossings 12.
Yeah, I can't believe we forgot to mention this earlier.
It's the same building. The guy went out when they built these in the 70s and 80s and just called them the Crossings 1. He liked the name, so he did the Crossings 2.
We've seen 12. There may be 20 of them.
Yeah, there might be more, but so this will be the second one that we bought of the same product, and it's a lot of like we're standard doing here. It's 1 and 2 story exterior walk-ups, lots of doors. So we like that aspect of it. So on the pro forma side, we're always going in and we're projecting what are we going to do over a 5-year period as we hold this. And on all of the deals we send out, we use the same pro forma projections, the same pro forma template, so it can be easily compared across deals. Over the years, we've added a part at the bottom here that shows what our reserves are. So our cash on cash return is after we do all of our critical reserves for the year, which includes our TI, our CapEx, our leasing commission. So even if we're not signing a lease that we pay a commission for, we're still reserving money, knowing that eventually down the line, we're going to have a broker come involved that we got to pay commissions to. So we reserve that each year across the deal. Typically, if it's over 2,500 square feet on an operating side of our business, that tenant's going to bring a broker to the table, normally always.
Right. When I'm talking to individual investors and going through this piece, it's a lot to take in if you're not an accountant, not a numbers person. But what I'll point out is if you just look at the top line, first line of what rent we're taking in, and the second line below that is vacancy of the property. And then looking at those two numbers, if you scan left to right on the screen, you'll see the rent will go up and vacancy will go down. And that's just in number form what our strategy is. We're going to come in, fund leasing, increase the amount of money we're taking in, and then decrease the amount of money we're losing because no one's in the space.
Yeah. So overall cash flow and returns that this pro forma is generating, this kind of consolidates everything that was on that last screen there. And we also have a neat little part here where it says, okay, potential cash flows per $100,000. This is basically what the cash flow looks like on an annual basis for every $100,000 that's invested. When we go down below that, it has our total investment returns, and you can go from year 1 out to year 5, where it gets up to 17%. One of the numbers we're using to peg this is what are we going to exit this deal at, right? And kind of standard practice for us is that we're going to exit at the same calculation that we bought it for, because we can't really control what the market's doing. So we're saying, we're going to exit it at a 7 cap. Right? The market is, higher or lower than that, depending on what happens. And you can see the deal level IRR that goes up and down based on that. So yeah, Dominique, we're going to take it from here and kind of go over what our upcoming dates are and how things are flowing from here.
Absolutely. Thank you guys so much for really giving us a great understanding of the Crossing Center and why we're so excited about this acquisition. This is the part of the presentation that is directly tailored to our investors, some dates to keep on your calendar and keep top of mind. The subscription package will become available around July 9th. And for that fresh equity portion, we do ask for funds due and the subscription documents to be submitted and or initiated by July 12th to prepare for a closing date by July 26th with an extended closing of August 10th. We do have a couple of other Greenleaf events that we would like to share with you all. We just did an overview of the Crossing Center. Thank you, gentlemen. And we have some pretty exciting upcoming Greenleaf Connect events to welcome. We have the Greenleaf Foundation and Community Farms overview, a Park Hill property update. That is another apartment property that Greenleaf has in our portfolio, a QOZ fund update along with Oak Hollow. And then we have some new deals coming up within our pipeline. And then we have the second quarter 2021 review with going over our residential and commercial portfolio. So those are our upcoming dates. Feel free to jot them down or screenshot this presentation slide for you. I'm going to hand it off to Natalie, and we are going to kick off our question and answer portion. Again, this is recorded, so this concludes our regularly scheduled program. So we will be sure to share this with you if you need to log off for whatever you have in store for today. So I'll hand it over to Natalie.
Okay, thank you, Dominique, and thank you to everyone who submitted questions to us today. We had some great ones come through, so we'll start working through those now. First, we have a couple of 1031 questions. We'll pitch those over to you, Dave. The first one, why are we not buying another multifamily property with the 1031 funds?
Yeah, that's a good question. We probably haven't bought an apartment deal in almost 2 years now. And we bought some when we did our QOZ fund, which was kind of the end of 2019 and early 2020. But like we sold Ridgewood, we sold it at just over a 3 cap. And that is just way too expensive for us. There's not a whole lot of yield there. We're not quite sure how those deals are working. I mentioned this group that's buying this, they're buying at 115,000 a unit. We're not sure what kind of debt they have on it, but from Ridgewood, we weren't able to make all of our distributions, and we only had about 25,000 a unit of debt on us. So I don't know how it works with $80,000 of debt on it. If we're able to figure that out, we might be more aggressive in buying some apartments. But right now, we're kind of hitting the brakes on the apartments and looking for other avenues that provide actual yield that we can find.
Another 1031 question, how are you able to add fresh equity to a 1031?
Yeah, so with that structure, we're taking the 1031 dollars to acquire the asset, and then we're adding fresh equity to that same LLC kind of in conjunction with the closing. Fast forward 5 years, we go to sell this, we'll have kind of the same situation where it doesn't matter what part of that equity stack that you're in, you can choosing to roll and continue with the 1031. People just have different basis as we get to that point.
Next question I'll give to you, Nathan. You gave us a little bit of information about the seller's profile, but why exactly is this seller selling the property?
Sure. Yeah, I've gotten these questions a couple times. The seller, they bought this deal with a 1031 years ago, and their core competency is they're self-storage developers. And so, they just kind of bought this deal. It's outside of their wheelhouse, and they haven't really given the capital needed to kind of take it to the next level. So they've left a little bit of meat on the bone for us, and we caught them in the right time. The broker that brought us the Johnson Square deal, once we closed on that one, immediately went to this owner, said, I've got a buyer for you, and talked them out of refinancing their debt and continuing to hold it and convince them to sell it to us. So really it's that broker relationship that, that we've built and done, half a dozen deals with. He was the one that drove this process and led to us getting this deal off market, so no one else competing with us for it.
Great. So Dave, who will be handling the management and leasing aspects of the crossings for Greenleaf?
Yeah, so in the very beginning of the presentation here, our operating team, we've been building that up as we got into more of the commercial space. So we have a commercial management team right now. They'll be taking on the operations at this asset, and that's everything from the property manager to maintenance and leasing that we'll handle in-house. Part of that, though, I mentioned a little bit too, is once a tenant's over 2,500 square feet, that's a business. They're almost always bringing another leasing agent or leasing broker to the table. So we are typically engaging with lots of different leasing agents and brokers to coordinate that new tenant move-in. So we have our leasing side, but we're almost always partnering with another leasing agency that's going to help us do that.
Okay. Now, crystal ball question. Will we definitely be selling the property in 5 years?
Well, we use the 5-year point more to tie to give us kind of a snapshot of what we could project over a period. Beyond that is kind of hard to assess, but we're going to get to the 5-year point, and then we're going to say, hey, does it make more sense to hold this, or does it make more sense to sell this? So we'll really look at it from that standpoint. At 5 years, we'll have to do a refinance and
The debt's 5 years, so it's pegging the investment analysis to how long the debt is just seems like a good place to start. We could pick 4 years, we could pick 6 years. The market could dictate a sale next year, or holding 10 years if it's cash flowing well. So you got to pick something tied to the debt.
So we made a decision with 5 years on our projection.
That makes sense. Well, that closes out our questions for today. Again, we thank everyone for submitting your questions. And of course, we want to thank our hosts, Dave and Nathan, for sharing their insights with us on the Crossing Center. As we wrap this up, just a friendly reminder of our upcoming live stream schedules here on the screen. And be sure to check out our Greenleaf Connect YouTube channel for all of our recorded live streams, with this recording being made available over the next 24 hours.
Does it go on YouTube?
Yes, it does. So this concludes our Crossing Center live stream. We certainly appreciate you joining us today, and we look forward to having you join us on our upcoming live streams. Enjoy your day. Bye, everyone.
All right. Thank you very much, everyone. Have a good rest of the afternoon.
Happy 4th.